The money in your pocket is worthless. The paper costs 17 cents to print. The number in your bank account is a row in a database, and yet you'll trade a week of your life for a stack of it. Why? Because money was never a thing. It's a story that every civilization on Earth agreed to believe. And it took 5,000 years to write. In the next 10 minutes, you'll see the whole story. The ledgers older than the pyramids, the king so rich we still use his name, the empire that died of inflation, the Chinese experiment that stunned Marco Polo, and the 50-year-old decision that turned every dollar on Earth into pure faith. This is the entire history of money. Here's the first surprise. Money didn't start as coins. It started as accounting. 5,500 years ago in Mesopotamia, temple clerks pressed marks into wet clay. Who delivered barley? Who owed labor? Who borrowed grain and had to pay it back at harvest? You've heard the story that money replaced barter, that people swapped chickens for pots until coins came along. Historians have searched for a society that actually worked that way, and they've essentially never found one. What came first was debt, written, witnessed, and owed. The shekel began not as a coin, but as a weight of barley. Money's first form was a ledger entry. Remember that, because this story ends with a ledger too. For 3,000 years that system worked. Grain weights, silver bars, ledgers. Then, around 600 BC, in a small kingdom in what's now Turkey, someone had an idea that would outlive every empire that followed. Lydia sat on a river that washed down electrum, a natural blend of gold and silver. Lydian kings began stamping lumps of it with a lion, a royal guarantee. This piece is real. This weight is true. And then came the king who perfected it, Croesus. He refined the metal, separated pure gold from pure silver, and issued the world's first true currency, coins so trusted that traders took them without weighing them. Croesus became so wealthy that 25 centuries later, we still say it, rich as Croesus. But Croesus is also money's first warning label. Convinced by an oracle that he was destined to destroy a great empire, he marched against Persia. He did destroy a great empire, his own. The richest man in the world lost everything, and the Persians took his invention and spread coinage from Egypt to India. The first lesson of money was written by its inventor. No fortune protects you from a bad decision. Coins turned out to be a technology, and like every technology, they scaled. Athens paid shipbuilders and soldiers in silver owls, and historians argue democracy itself was easier with coins. You can't pay 10,000 rowers with ledger entries in a temple. Alexander carried coinage to the edge of the known world. Then Rome industrialized it, and Rome broke it. The denarius started as nearly pure silver, but emperors had legions to pay and no taxes left to raise, so they quietly mixed in cheaper metal. Over 2 centuries, the denarius fell from 90% silver to less than 5%. Prices exploded. In the crisis of the 3rd century, inflation ran so hot that Diocletian tried to fix prices by law, on pain of death. It failed, the way price controls usually do. Rome didn't only fall to invaders, it fell in part to its own mint. While Europe spent the Middle Ages back on ledgers and scraps of silver, China ran the boldest monetary experiment in history. Chinese coins were bronze, heavy, and nearly worthless individually. A merchant's fortune weighed tons, so in Sichuan, around the year 1000, merchants began trading paper receipts for coins held in deposit. In 1024, the Song government took over and printed the world's first official paper money. 2 centuries later, Kublai Khan went further. Paper money backed by nothing but the emperor's command and a death penalty for refusing it. When Marco Polo saw it, he was so amazed he devoted an entire chapter to it, saying the great Khan had mastered alchemy, paper that commands the value of gold. And then China wrote the second warning label. Each dynasty printed more and more and more until the paper collapsed. By the 1400s, China abandoned paper money entirely, 400 years before Europe even started. The lesson was carved early. Paper money works exactly as long as the printer shows restraint. Keep that one loaded. It comes back at the end. Europe's problem was different. Silver was scarce, roads were deadly, and the church banned charging interest. The solution came from Italian merchants, and it made one family richer than kings. The bill of exchange, pay in florins, present the paper in London, collect in English pounds. Money began to travel as information while the coins stayed home. The Medici built the greatest bank of the age on this paper, plus a second invention we still run civilization on, double-entry bookkeeping, every transaction recorded twice, so the books always balance and fraud has nowhere to hide. Banking made the Medici the de facto rulers of Florence, patrons of Michelangelo and Leonardo, and fathers of 4 popes. Money was no longer metal, it was becoming a network. In 1545, the Spanish found a mountain in the Andes that was almost literally made of silver, Potosi. Over the next century, tens of thousands of tons of it flooded across the planet, minted into the Piece of 8, the world's first truly global currency, accepted from Mexico City to Manila to Canton. Spain became the richest empire on earth, and then the strangest thing happened. All that treasure made it poorer. So much silver chasing the same goods meant prices across Europe quadrupled in a century, while Spain skipped building industry because, why bother? The fleet arrives every year. The empire defaulted on its debts over and over and slid into decline, while soggy little Holland and England, forced to invent trade, insurance, and joint stock companies instead, took over the world. Third warning label, a flood of money is not the same thing as wealth. Here's where your wallet is invented. London goldsmiths rented out vault space, and their paper receipts started changing hands instead of the gold itself. Sweden tried the first European banknotes in 1661. The bank printed too many and collapsed within years, a very Chinese ending. But in 1694, England institutionalized the idea. The Bank of England, founded to fund a war with France, issuing notes backed by the state itself. This was the great trade that built the modern world. Governments got a money machine for wars and empires. Merchants got paper that was finally safe to trust. Within a century, banknotes, government debt, and stock markets turned London into the planet's financial capital. Money stories stopped being about metal and became about institutions. The 1800s tied it all together with a simple promise. Every pound, franc, and dollar is redeemable in gold, at a fixed rate, forever. The gold standard made money international. Trade exploded. A century of globalization ran on that single promise. It also made money rigid. When panic hit, and it hit constantly, 1873, 1893, 1907, gold could not stretch. In 1907, one private banker, J.P. Morgan, had to personally lock America's bankers in his library to stop a collapse. The humiliation stuck. In 1913, the United States created the Federal Reserve, a permanent lender behind the banks. Then 2 world wars and the Great Depression broke the gold promise everywhere. Countries that ditched gold early recovered fastest. The chains were golden, and they were still chains. In 1944, in a New Hampshire hotel, the winners of World War II built a new system. Every currency fixed to the dollar, and the dollar fixed to gold at $35 an ounce. It worked for 1 generation. Then America spent big on war and welfare, dollars piled up overseas, and foreign governments started quietly trading them in for gold. The vault was draining. So on August 15, 1971, on a Sunday night, Richard Nixon went on television and closed the gold window. He called it temporary. It has now been temporary for over 50 years. Since that night, every major currency on earth is fiat, backed by no metal, no mountain, no vault. Backed by exactly one thing, the same thing that backed Kublai Khan's paper, trust in the institution that prints it. The entire global economy is running the Chinese experiment, and betting it ends differently this time. And then money finished a journey 5,000 years long. It went back to being a ledger. Credit cards in the 50s, electronic settlement in the 70s. By today, physical cash is less than 10% of the world's money. The rest never exists at all, except as entries in databases, edited billions of times a day. When you get paid, nothing moves. A number in one ledger goes down, a number in another goes up. Mesopotamian temple clerks would understand it instantly. Bitcoin arrived in 2009 claiming to solve the old problem, a money no ruler can overprint. And whatever you think of it, it forced the question into the open. Now central banks are building digital currencies of their own. The next chapter of this story is being written right now, and it's a fight over one thing: Who gets to keep the ledger? 5,000 years, and the story of money keeps 3 rules. Whoever keeps the ledger has the power. Every money is a promise, and every promise gets tested. And no one, not Croesus, not Rome, not Spain, not anyone, has ever been rich enough to survive forgetting that. This channel is named for the king who invented money and lost everything, because those 2 facts belong together. Next, we're covering every financial crisis of the last 400 years, the same mistake in 12 different costumes. And if you want that story, subscribe so it finds you.